Good morning, everyone. China's injecting new stimulus measures to support their economy. They're cutting interest rates and injecting about $140 billion in order to prop up a slowing economy, especially a slowing housing market. This is more cowbell in the economy, and this will enable a cheaper flow of capital around the world. Asset prices should benefit from this. The stock market should do well, and I think Bitcoin should do well. Historically, Bitcoin lags global liquidity by about 10 weeks. And if we're seeing more money and cheaper money flow throughout the economy, this is a pretty good sign. We just saw Fed rate cuts in the US by 50 basis points last week. And now we're seeing this China rate cut and new stimulus measures. This is going to increase global liquidity, which is good for the markets, the stock market, as well as Bitcoin. And we have Ed Yardeni pretty much saying that the Fed cutting interest rates into a strong economy increases the chances of a market melt-up and the S&P 500 above 6,000 by year-end, in a similar situation as the mid-90s dot-com boom. And I kind of agree with him. Brian Belsky from BMO Capital Markets also raised his price target in the S&P 500 by year-end from 5,600 to 6,100. My price target was 5,600 to 5,800. I do think there's an increased chances of a market melt-up given that the Fed is cutting interest rates into a strong economy. More liquidity is good for the markets. I wouldn't say 6,000 or above is my base case, but it's certainly possible. I'm still going to stick with 56 to 5,800 for now, but that the chances, in my opinion, have increased for the S&P 500 to hit over 6,000 by year-end. Let's stay tuned to see what happens.